Hello, and welcome to Fireside with the VC. My name is Andrew Romans, and today we're talking about Africa. We are very lucky to have Marsha Wulff with us. Marsha is the founder of Lofty VC, which is a top 3 venture capital firm focused on investing in seed, early stage tech startups in sub-Saharan Africa. Marsha was very successful in business before becoming a venture capitalist. She's going to talk to us about how challenging and hard it was raising her first fund, as well as funds 2 and 3, and also about the challenges and opportunities of investing in Africa-based startups. Marsha's been shattering records as a woman fundpreneur, founder of a venture firm. She was kind enough to be a guest speaker at Chapman University, where I teach a class in beautiful Southern California. At the last minute, things changed, and we're both sadly in hotel rooms very late at night speaking to the students who are in class, mostly. And if you stick around to the end, you'll hear questions from our students for Marsha. So with that, let's jump into the episode.
It's relationships. It's relationship-based. It's all about the entrepreneur. At that stage, at seed stage, it's all about the entrepreneur.
When a startup is pitching you, or you're pitching the LP, of why this market matters, where are the people, what's GDP per capita, what's the supply demand, or none of that fits in.
Okay, so you want
I'm definitely making you laugh.
What our priorities are obviously market-based, but you start with the entrepreneur, because the entrepreneur has to know the market better than you do, right? It's their company. So if they know a big problem, and Americans actually won't know a lot of those big problems. They know a big problem, and they have loved ones that are suffering on a daily basis in a major way. And they have prepared themselves to reach global expertise in in whatever. They were with Goldman, they have their PhD, they've got their MD, whatever. And they are committed to spending their life solving this problem. And it's a big problem for a lot of people. And they are using a tech innovation so that it can ramp up rapidly at a low burn rate. So yes, big market does matter. And it is easier to start in a country like Nigeria, which at that time was almost 200 million. Now it's like 210. And so they all kind of share the same problem, same currency and all of that.
So like there's certain like copycat business models for startups to invest in, but then there's the other side, which I think was very much Africa, which is they're gonna leapfrog over how the Western countries developed and go from dial-up internet with 96 baud internet modems that slowly get to 256K down, that slowly get to fiber to the home. They're going to immediately go to mobile. So they're immediately going to be mobile first, and there will be no fixed internet, and they're booking mortgages from the back of a moped. And it's like 89% conversion rates on mobiles, as opposed to like, they're not geniuses of the real estate. It was just like, they were in so much a traffic jam, and it was a necessity to book that vacation or mortgage on a mobile phone. So they solve unique problems that exist in that archipelago nation or whatever, specific problems that we do not have in the US. And then you start to see, oh my God, I could take that and sell that in Long Island.
Exactly, because who doesn't want lower cost healthcare? Who doesn't want more responsive banking? Who wants to spend days setting up a bank account in the US? I had to do that last year instead of just minutes on mobile banking. I mean, so I knew that once they nailed it in a economy that couldn't afford something more expensive, where it had to be easy and it had to be less expensive and it had to solve a big problem, that it immediately go global. What's happening is that that the African entrepreneurs are actually leading a decade ahead on mobile phone innovations. I got introduced to all kinds of things over the past 20 years because I was in Africa first. I'd come home and use my SMS messaging, and nobody here knew what it was. I use WhatsApp every day. Nobody here knows what it is. I'm nagging the bankers saying, you're going to be out on the street if you can't figure out how to do digital banking. And they say, oh, we've got an online portal to our old-fashioned bank accounts. No, you guys don't even know what's going to hit you, because I've been investing in these things and they are changing the world, and you're way behind. No, the Africans aren't copying something and just bringing it in like a windmill. They're creating something new and different that is just, it's leapfrogging what the United States is accustomed to.
Okay, and let's talk, Marsha, about the challenges. Like I would argue that if I invest in a company in Silicon Valley, that I can effortlessly make a list of 100 VCs that I have a personal relationship with to introduce the founder to fund their next round. Whereas in Africa, it might be a short list of people that you can introduce to. Now that's a challenge, but at the end, on the other hand, maybe that's an opportunity for you. How do you feel about that? Or what does that reality look like for you?
Well, foreign investors create problems for African investors. So don't expect the Africans to fall all over themselves in order to get it, because they come with two problems. One is they don't understand the problem that the African entrepreneur is trying to solve, number one. And number two, often in Africa, they have been coming in from a background in either nonprofits, which is grant funding, and that comes with a whole slew of problems, or government funding, government-related development funding, which comes with a whole lot of debt-related terms that are terrible, or they're private equity backed, because that's where the big money is. And so you graduate from Wharton, you go work for Blackstone, BlackRock, whatever, and then you try to come back in downstream, or I guess it'd be upstream, into startups in Africa. Well, but you have never built your own company from scratch. Well, then you're not going to be much good to those entrepreneurs. You're going to be imposing all kinds of things they're not ready for. So that's why
you'll be wrong most of the time with your banging your fist on the table opinions.
Pardon?
You'll be wrong most of the time as you bang your fist on the table with your opinion.
That's exactly right. The most successful investors in Africa, who are foreign based like me, are humble. We've learned to be humble. And the reason why is, if we're good at investing, we make sure that our entrepreneur knows more about this than we do. Our entrepreneur has a better network than we do. Yes, I felt like, wow, these people are doing so much. They're doing everything they can. The least I can do is connect them to resources. But my God, I have failed miserably in trying to get the people that you may be able to get to step out and to take a risk. And so we've really built this second venture capital fund that we call Fund 3, because the first was angel, the second one was I backed it, and then we had a handful of people join me. And then this time, where we've got 90 some African professionals who used to run, Accenture or some of the big banks, or that sort of thing. They're the investors, and they understand the problems that these entrepreneurs are solving. So when they come in or they've already built their own businesses. Okay, so I think I was differentiating between foreign investors who don't understand the market versus local Africans who have gotten a global expertise and excellence, and then returned home. And every one of them seemed to be passionate about creating jobs and backing startups. But every single development corporation out there, or entity that's related to nonprofits and related to government or private equity, have been aiming at things that are either really poorest of the poor grant funding, which never is, it seems to be scalable or how can I say it, self-sufficient, or else they're coming in at they insist on their criteria being entities that are already profitable. Nobody's been aiming at where the biggest opportunity was, and that's the entrepreneurs that have gotten global expertise and come back home to solve a problem. Their loved ones think they're crazy because they left, a big corporate job in America or the UK, become entrepreneurs and then LPs, or they keep working at their professional job and become angel investors, and then work into
the ones that we have are keeping their corporate jobs and investing, or they've introduced us to their friends back in Lagos that are just like real estate developers.
I mean, our economy's doing, all the negative things. Why would they not back out? I mean, right.
What does the exit market look like in your world?
Okay, well, Paystack exited to Stripe, 200 million in a 4-year-old venture. So that's the acquisition side, and we've been able to exit through follow-on rounds. Like I said, most of the money is sitting out there at PE stage. So when you get in at seed stage, well, our angels get in pre-seed. So they already true up the ventures for us, so that when we often get into seed stage ventures that we already know for a few years. And those seed stages, by the time they get to BC round, we're sitting at 8, 10, 12x. We just closed a fund where we exited after a 6-month hold, and it was 10, 12. It's in my slide, 10, 12x. So that before we even close this third venture fund.
You're exiting on the secondary market with markups. That's one thing. And then you're selling to American M&A buyers.
No, we're not. Oh, Paystack did sell to Stripe. We weren't in that one, but Stripe was one of the seed stage investors in Paystack in the first place. So they grew up together.
Okay. And what do you think cash on cash multiples look like for investors at your stage, for fund wide?
Well, I can show you on my slides. So the first fund, we're sitting at 4.6 fund wide, and we still have 3 or 4 more to exit out of the 7 total, 6 or 7 total. That's the first venture fund. The angel fund, I don't have the details. It is in that slide that I'll show you. And then this fund that we just closed in January was supposed to be 10 million fund, but we actually got 14 million, and then we got 2 million from a $200,000 investment. So that gave us 16 million to invest already.
Recycled.
Yeah, already, and that was before the fund even closed. I've never heard of such a thing. Have you?
I've recycled, but yeah.
And yeah, those are, it's just like, because of our early, it's one success feeds on another. Because of our early successes, the money that's been sitting on the sidelines have been coming in, and we were terrified at first because that money was just, it's so big compared to the tiny market. We talk about how Africa's market's exploding, but when you put it into the context of global tech startups, it's like 4% of global tech startup investments or something. So there's a lot of money out there that could come in and just flood it too fast and throw the valuations way out of the range of local African angel investors or venture capitalists like we are. I mean, I'm the only non-African running this fund, and one of the few non-African investors, and all of our founders are African founders. So we worried about that for this last fund. But what happened was that those investors that are willing to come in early like this, global investors, they're smart enough to know that they should only invest alongside of local investors. So they work out some deal with the entrepreneurs, say, yeah, we like you. Yeah, we like what you're doing. We want to put in, $10 million into your seed fund or what, your seed stage. But we don't know your markets and stuff. So we want you to find a legitimate African venture capital team that will come in alongside of us. And so they come to us, and they or the smart investors will send them to us. And so we say, well, yeah, we want in, but we have to get in a discount because this is ridiculous compared to what you and I both know you're really worth,
Well, I want to know about that. So, in ancient times, a startup was worth $1 million at the first time that they raised money. So your pre-money was $1 million. Then it was 3 million.
Well, okay, let me cut through that and say, okay,
then it was 5, then it's 10. Now people are talking 12 or
1 million
70.
valuation for having a team, 1 million, and another 1 million for having a good market, and you get 1 million for your traction and 1 million for your IP. So you start off maybe thinking you're worth 4 million, something like that, before you start really.
Sub-Saharan African company with team, no revenue. Like, give me some numbers.
That's right, no revenue. Angel investors, of course, first. That's pre-seed. Seed stage, there is some revenue. It may just be 50 or 100 or 500,000 a year, but it's early days. It's just think Y Combinator. That's where we come in. We come in there. Right when they get their first revenues and they've got a team and they've got a plan.
So what do you think the valuation would be in the Valley compared to Nigeria?
Well, because Y Combinator has done such an excellent job of evening the playing field for global entrepreneurs, whether you're in Poland or Russia or Czechoslovakia or Ghana, it's really helped keep that pretty level, as long as they've got the acumen to apply online to Y Combinator.
Yeah.
And if their founders are astute and malleable, they've got a shot. So it's not as out of whack as you might think.
I was going to say, I try not to miss a YC demo day, and they do have African entrepreneurs, and they do not appear to be on sale.
Why would they? If somebody's willing to pay them 3 times more than they thought they would, higher valuation, why not, right? So these investors, like I said, they're pretty astute, and they say, well, we don't want the next round to be a down round. So if you're really not ready for it, we want to know. And that's why they want local investors to come in and rationalize the valuations. And that's what we've been doing. So we've been very fortunate in this second venture capital fund that we put together, that we already have. We're already sitting at about 2x on the fund, and we just closed in January. We've got a realized exit that, like I said, of $2 million, and it was on a $10 million fund. So that's pretty good already, right?
Yeah.
So next time we're shooting for a lot bigger fund. It's risk because, but it's getting less. It is getting closer. The polls are getting a lot. It used to be really a problem. I saw so many corporations make big mistakes by thinking just because the color matches but the culture may be totally different. So here again, there's humility, there's reality. You have to face reality, and but over the last couple of years, I've become aware that it's happening. It's coming together much, and it's just beautiful when it does. So my team does have the combination on it now. 10 years ago, it was not happening.
Any government matching?
They are so difficult to work with because okay, so we're cowboys, right? And these businesses aren't formalized yet. They're not profitable. They don't have their governance all worked out. So you've got to work with that and work toward. I mean, Silicon Valley knows how this goes. You start informal, you formalize as you've got the money and the time and the personnel to do it. You don't have that at the beginning, so you can't come in with all this red tape when the company doesn't even have a treasurer or a decent CFO yet. So that's why. I mean, that's really the answer to my question.
So they won't just leave the startup alone and just give you matching, like you raise 12, they match you with 12 and leave
That
you
would be
alone?
so good. That would be so perfect. But no, they don't do that yet.
You know, I
And the
can
other
try.
thing,
We can try together to tell them this is what they did in Israel. This is what they did in Germany. This is what they
yes,
did in France. This is
yes,
it. This is what they did in the
yeah.
UK. And I can introduce you to the CEO of every one of them. Like I
And
can.
European, that'd be fantastic.
So it
European
would help you
Investment
to say,
Bank.
like, you need a reference.
Yeah, right.
Government needs to cover its ass. The world is small.
That's right. But when you're in the flow, you're in the flow. And you are, obviously. So congratulations. So I had no idea most of my life that I would ever end up being a venture capitalist, and with a team that's among the top 3 investors on the continent in terms of number of deals. But I started in being raised as a military brat. And so that gave me a really broad exposure to what it feels like to be a global citizen instead of a very limited community feel.
Marsha, where were you born? What were some of the countries your family had?
Well, when I was born, it was within the Arctic Circle. My father was on loan to an Air Force base that was building the strategic defense system. And so my mother was living in the family was living in an Airstream trailer, and my mother had to chisel the sheets away from the edge in order to change them to get the ice off. And
By the
then
way, I was born on a U.S. naval base in Hayama, Kanagawa, Japan.
no
And
kidding.
my
I
brother
always
was born
envied
in
those people.
Encinitas, not far from where our students are, where you and I should be together right now.
Yeah, that's right. That's right. So I do think that I don't know if you've seen any of the research done on this, but those of us born in the military do have more of a mission mentality. And I think people like you and I have more of the, like I said, the global citizen feel for our community. Because when I was, I've got a picture of myself 2 years old sitting on my haunches with a bunch of Chinese people who, because my dad was helping the what do you call it, Chiang Kai-shek's army figure out things like road building and welding in Taiwan, Formosa at the time. And then I spent over 5 years growing up in Germany. So in the meantime, I was crisscrossing the United States by car and looking around saying, why is this city here? And why is there no city here? So you just ask a lot of questions when you're raised in a diverse situation. And some recent research has shown that those of us that have had to live and adapt in other cultures, we are more creative about our solutions and problem solving. And so that carries over into my work, Andrew, because I look for people who have had international exposure, because they are more creative and they are more global in their problem solving and in their community perspective. So you don't see our LoftyInc team investing in very many Africans that have never left their homeland. And we really avoid expats as founders unless they have really, kind of crossed that bridge to become more of a local and to have a heavy influence on their teams. It's actually a risk reduction strategy as an investor. So what I did was I held a salon dinner for a lot of people who were interested in projects in Africa, see what we can build as a network and collaboration. By that time, I'd already spent decades working with international students and a decade or more getting to know Africa and the business environment and the venture capital situation and acceleration ecosystems in South Africa. But I had been pulled into speaking at American business schools across the country And then the African diaspora who were studying there, who were alumni of those, were starting to pull me into their projects back home. So I had been a keynote speaker for the Kenyan group for a couple of years. And at one point, so at the point of this dinner, a Kenyan gal brought, who was studying for her PhD in Texas, brought her former boyfriend from Nigeria. They had been studying together to my salon dinner. And we struck up we recognized that we had mutual intentions and goals in building some sort of investment opportunity to facilitate African entrepreneurs who were innovative, tech-based, rapid growth, and job creation.
Okay. And did you have an anchor LP going into this, or?
That would be me. I had helped build an oil and gas company, and then I left that in order to focus on my African work, and I wasn't sure. So I had been doing angel investing in impact investing, both in the United States and Africa, for about 10 years at this point.
So did you generate wealth from your oil and gas business, and that allowed you to consider making some opportunistic but perhaps philanthropic impact investments?
That's right. Yeah. So I built 3 unicorns, or helped build them, basically before I really established the venture fund for Africa. They were Pioneer Natural Resources, Parsley Energy, and Teladoc, a health tech company in the United States. Those exits helped me be able to consider. So I started investing in Africa initially as, how can I say this? It's sort of both as angel investor and also in public markets. And neither of those were going particularly well for me, and I knew why. I needed more of a network. So I was always trying to, I was always digging deeper and expanding my networks to make, and just learning. It takes so long, so much energy, so much time to learn just the answers to, well, why didn't companies come back into South Africa after apartheid? Why haven't the African diaspora come back the way that the Chinese and Indian diaspora have come? Just asking question after question and doing lots and lots of research until you feel like you've got the answers. And then you start working with basically, I knew that I needed, I actually tried to launch my first venture capital fund in 2004. I had a VC that was, I had 2 partners with me. One was with the IFC at the time, and the other was with Wharton, and also with a Silicon Valley-based biotech. And the 3 of us were going to be the core group of this fund. And so I had spent 7 years building the networks in order to have a portfolio that was health innovations that were by Africa, for Africa. And I started bringing that portfolio around to
Marsha, can you define Africa? Do you mean sub-Saharan Africa, or does that include MENA?
No, it was just sub-Saharan Africa at the time. My entrepreneurs were mainly Kenyan and Nigerian and Ghanaian and South African, yeah.
All right, so Ghana, Nigeria, Kenya, South Africa.
Yeah. Those were my entrepreneurs. So anyway, I didn't expect anyone to back a blind pool like a venture fund might normally be launched with, because I knew there was just too many new components to this endeavor, right? So instead, I had the portfolio and qualified partners, and I went around trying to raise capital. I had studied the first venture capital fund that was a biotech fund for this niche. I mean, yeah, there's always been lots of money for the later stage ventures, manufacturers that were wanting to ramp up from $50 million a year to $100 million a year kind of projects, but that's not what I was interested in. I was interested in innovation-based ventures that could ramp up to $1 billion in, a couple of years. And I knew that, there had to be an opportunity for that. So I went around and knocked on doors, and everybody thought I was crazy. Proparco, the CDC in London, Commonwealth Development Corporation, and in fact, they kept ignoring me, and I finally got somebody on the phone, and I said, "What do you think of our portfolio?" And he said, "Well, we just don't think that you'll ever find enough deal flow to do this." I said, "Then you've not even
no, that is
opened."
so wrong.
But listen to this, Andrew. I said, "I know now that you have not even opened the deck that I left with you, because I had the portfolio in there." I mean, they should have been embarrassed and they should have been fired, but instead they've been what do you call it when they get promoted? It's ridiculous. So anyway, there's a lot of frustration there in the hypocrisy of listening. For 10 years, I listened to people, IFC and OPIC and CDC and Proparco, saying, we've got money allocated for African projects and ventures, but we don't have any deal flow that suits our purposes. Well, that's because you want something that's already profitable. How are they ever supposed to get profitable without anybody who's going to invest early, right? So back now, of course, we're in my living room, chatting with these other Africans that I've mentioned, 2009. And what I'm realizing is this group is really grounded. They're from there. They want to return there. They're here getting their advanced degrees, et cetera. So what LoftyInc started doing right after that, Michael Oluwabigmi, I still stumble over his last name, established the first LoftyInc entity that would become the sort of the umbrella under which the sister companies or brother companies would all be built. And under that umbrella, they established the Winnovation Hub accelerators, or a tech hub. It's called a tech hub. And they joined forces with some of my other colleagues and friends, the Uganda-based Hive CoLab and the Nairobi-based iHub, which is Eric Hirschman and his team. And in Kampala, it was Teddy Rouge and his team. And the three of them and some other core groups, tech hubs, established AfriLabs to become a best practices entity that was Pan-African. Meanwhile, back in Lagos, they had been tutoring entrepreneurs, young tech entrepreneurs, in how to start a company. And the first thing they realized was these are a bunch of cats, and we got to group them into teams. So there was the team building, and MIT was helping with the curricula, and then the group realized we need some angel investors. So they got angel investors, local people who'd come back from abroad, people who were running the Accentures and the banks and so forth. And so individual Africans, we're not talking the billionaires, we're talking, professionals, started this angel network back in, that was Afripreneurs. They established a formal entity that was the Afripreneur Angel Group Network, and they started investing. So this was about 2011, and in the process, they kind of established two angel networks because they were going to have the Lofty Angel Fund, and that became the Lagos Angel Network because some municipalities were willing to put some money into it. The Lagos is very proactive and progressive with the tech support. Anyway, so entity upon entity was built in this sort of food chain. The ecosystem was being built in Nigeria, so that by the time I was helping with the Silicon Valley African Angel Diaspora Group to form in an investor symposium. I was trying to find the best speakers, for example. And one morning I wake up and see Mark Zuckerberg all over the news. You remember when he was walking the streets of Lagos?
Well, I remember he was like, I'm not going to sign up Andrew's wife 5 more times. Maybe I should try Legos. Right? Like, if I've signed up all the Americans, I've got to buy WhatsApp and I've got to go to Africa. Like that's what I understood.
Well, he had hired some very astute people from Africa that now were playing filling key roles in the Facebook Meta corporation, and one of them put together this deal so that he invested in Undella. So I immediately reach out to my Nigerian friends, this Michael Olua, me, and say, can you guys help me get Mark Zuckerberg to speak at the Silicon Valley African diaspora thing? And within 10 minutes, I had, there'd been copied all of these people and me as well. And Michael was saying, help Marsha get Mark to speak at this event. And on here were the names of all of the people who were listed in the Wall Street Journal article. You know, and so Michael, how do you know all these people? Oh, they invest through our angel group, and you know, we actually were one of the first tickets that went into we angel backed the Undella founders in the first place. We mentored this 19-year-old before he ever launched a successful company and all this stuff. So I'm thinking, wow, this is so cool. If you guys are on a roll like this, and Silicon Valley's actually seeing the opportunity to invest at angel and seed stage, let's launch a venture fund to carry this forward. Because I had been waiting for 20 years for a team that had that kind of deal flow, angel network, and now we've got Mark Zuckerberg, right? So that's why I went to work to establish this angel fund, not this venture capital fund, sorry, for seed stage. It's so tough. It took 4 years for us to raise $1 million so we could invest in 5 tiny ventures. And we ended up closing out that fund with a little over like 1.2 million and 7 ventures. But within 2.5 years, we had already exited Flutterwave with like 8x. So it did a 3x return on the entire fund. And we started getting on people's map.
So just a quick question, because I'm in the pharmaceutical science space. So I just want to know, like, in Africa.
Where are you from originally?
I'm from Zimbabwe. Yeah. So I'm from Zimbabwe, but I was staying in South Africa for the past 10 years. But yeah, so my question is, are you investing in any pharmaceutical companies in Africa?
Absolutely.
And like, what is it? And then what kind of stuff do you look at when you invest into like a startup pharmaceutical company?
Okay, before I ever got involved in venture investing, I actually launched a pharmaceutical company because I was seeing that there's this gap in medicines for Africa between the generics or the substandard local at that time, where they weren't being inspected and so forth, the fraudulent and coming in from Southeast Asia, right? And then the imported that were too expensive. So what's the middle class supposed to buy, right? So I understand, I find, well, over time with patients from my PhD biochem African friends that trained me, I realized where the gap was. But that didn't work for a number of reasons, but somebody else will get it done. Aspen has been doing it, for example.
Marsha,
right? Yeah.
Do you have a statistic on the number of drugs being delivered to humans in Africa that are actually fake?
It changes dramatically. Yeah, I do have some numbers, but they fluctuate dramatically based on the compliance. For example, Nigeria, which was probably still is pretty high, 95% out of pocket pay, no insurance, right? Their drug level of fraudulent drug was huge, like you said, just absolutely huge. But when Dorothy, the finance minister, lost her sister to fraudulent drug for some really critical malaria disease, or something like that. Then she went on what do you call it, the bandwagon. She went on a campaign to clean that up, and she worked with my friend who was from Zimbabwe, working in DC, with the U.S. Pharmacopoeia under the USAID to clean up those sources, the manufacturers of the fraudulent drugs and the importers of the fraudulent drugs from Southeast Asia. And they were shutting those down left, right, and center. And that got really down. That percentage went from like down to 16 or 4% or something like that. I've heard that it's been creeping back up again. But that is a really primary focus. But would you please tell me what your idea is? What was your name again? Arthur?
Arthur, yeah. So 2 different ideas. So first one being to get into like the generic drug manufacturing space.
Mm-hmm.
And then currently, like my PhD is based on designing drug delivery systems for cancer. So long term,
Cool.
I plan on getting into like biological drugs. So between those 2, would you advise towards starting a generic drug company? What are your thoughts on that?
You know what I would say is whichever is your passion, and if you've got a network that you can adequately address it from either one of those positions, just go for it. We have invested in 3 biotechs in Africa in the last year.
Okay.
And thanks to COVID, a lot of it came out of the diagnostic side. But okay, so Gene 54 in Nigeria, right? Do you know what their business model is?
No.
Okay, so it's really pretty how can I say this? Very practical. So and these are Black African founders for all 3 of these. Gene 54 is focused on building the gene banks, so that the protocols for the appropriate therapies can be applied to each of the established drug treatments, right? So that it can be appropriate for the personalized medicine. Okay, so that's what they're doing. Then Yamachi in Ghana. That PhD is so good, and he's going to be innovating a lot of oncology drugs eventually. So you might have a good. I'm happy to introduce you to. I'm sure he'd love to meet you, but he's collecting a real top-notch team around him, like you, PhD in some advanced genetic things. But he's also starting in Ghana with more of this, very practical. We've got to build the databases. And the guy in Rocket Health in Uganda, he started with the testing, the rapid test delivery and high quality services and all that stuff. And he's going to town. So I'm happy to introduce you to those 3, but I want you to do what you know needs to be done, and that you can build a team to do. And stay in touch with me and my colleague Idris Bello. He got his master's at Oxford in public health, as well as being on the tech side. And he and I collaborate on most of our biotech investments. So great to hear that that's your focus. There's so much to be done in that.
Okay, thank you so much.
Arthur, I have a friend who started a generic drug manufacturing company and then contract manufacturing company in Slovenia, which sounds really small, but the guy looks better off than anybody you'll know ever. He's done extremely well with some Vienna investors.
But I'm sorry to interrupt, Andrew, but because of the energy problem in Africa, that has to get worked out, or else it adds can add easily 40% to the cost of the generic drugs. So I was planning to have mine manufactured initially in the FDA approved facilities in India that were, only 30% of their capacity was being used. So because my goal was to get the high quality drugs at a low enough price for the middle class. So it depends on what your priority is, but you really have to be realistic about how much the electricity is going to cost. Next.
Okay. Thank you so much for the tips. I appreciate it.
Certainly.
Also, I would encourage people to ask Marsha questions, not only about things that relate to Africa or sub-Saharan Africa, but also what it's like being a fundpreneur and just starting a fund, period.
When you're 65. Better late than never.
You do not look 65, Marsha.
No, I'm 70. Last week, lots of flowers around here.
Really? Amazing.
Yeah. Yeah. By the way, I was glad to see the women in your class. Although it may look like a paltry number, it's still higher than average in the VC community.
Yeah, at this event that I'm at in Florida right now, they're talking about the percentage of women that are CEOs of Fortune 50 or 500 companies, and it's just appallingly low. The guys at Expert Mojo in LA say that the percentage of female African-American CEOs that reach a Series A is at 1% of all venture-backed Series A's.
Yeah, I don't take time to be frustrated over that. I just, whenever I find one, I really encourage her and I back her and I introduce her and, let's put our energy into that.
So we were discussing in our group of launching an ag tech CVC. So would you be able to tell us maybe a little bit about how to create synergy between a company and a corporate venture capital fund? Maybe the kind that like Google makes with Google Ventures or something like that, because that's the idea that we'll be proposing in the following class with the ag tech corporate venture capital fund.
So you would have multiple corporations that you would be representing?
Just the one.
Okay, so what is it that you want to do if you've already got one?
We don't have one. It's an idea that we're going to be presenting in the following class to the class.
Oh, okay. So are you already working for that one corporation?
No, it's just an idea.
That's the first step.
Yeah.
Because it's gonna be so specific. I actually think that this is a great idea. That if to build a new venture fund is so much easier if you've got one anchor like that, and especially in ag tech, it's it's tricky to find a technology that's going to be meaningful enough to be able to build an entire venture fund on. So I highly recommend. There's someone that I'd recommend you talk with who built that in Africa, representing sort of a portfolio of corporations that were coming into Africa. But why that didn't really work? I mean, they won't tell you. There are a lot of failures in Africa that nobody's learning from because they're too embarrassed to admit it. But when I've been at it this long, you start putting two and two together. You say, whatever happened to that? And I didn't think it would work because, but you can't just impose that on the market or impose that on a continent. Your idea, unless it's something that they need that is, grassroots coming up. So in this case, these large global ag corporations gathered together and they pushed out. So they would just have some initiative that they wanted. They wanted to grow more corn. They wanted to, export their GMO wheat. They want to do this, that, and so they would just put it out there and say, okay, if any of you African entrepreneurs want to do what we want, then we'll back you, but with a lot of strings attached. And we're going to, oh yeah, by the way, we're going to just watch you like a hawk and govern everything. So, I mean, that wasn't going to work, because at the early stage, the entrepreneurs are the ones with the passion. The entrepreneurs are the ones who are spending all night up, or like Elon Musk did, he slept under his desk. You have to work with the passions that are already there. So if you go and you find out what they're passionate about, and then try to match that up with a corporation, but that takes forever. So it's tricky. The whole thing's tricky, but it all comes down to teams. If you can put together a team that's cross-functionally astute to solve a big problem, and you can bring it to somebody with deep pockets that cares deeply about that big problem, that's going to work. But I've been working remotely using all of the tools that were available as soon as they become available since 1997, 2002. So none of this was new for our team. And as we became a team, nobody moved to be able to go and sit in an office together and look eyeball to eyeball.
Right.
So all of us are entrepreneurs, all of us are self-motivated, we all just share the same passions, job creation, tech-based, innovation-based, African opportunities, and matching the financing with the need. But the COVID accelerated our entrepreneurs platforms, like I mentioned with Rocket Health, being able to just take off because of the COVID diagnostic testing. I don't know if you've noticed this, but to me, diagnostic testing is going to be the driving force for where healthcare is going to go in the future. I just learned recently that our largest chain of drug companies are now hosting diagnostic testing first, and then if you're positive, then they will just give you the drug that Pfizer's making or whatever that solves the problem, that cures you of your COVID or whatever, right? So it's not going to be, you see how that flips, it sounds very innocent, but it flips healthcare on its head, right? Instead of going to your doctor first and then going to your pharmacist, it's the opposite. And that's actually more accepted in Africa. They already go to their chemist first, and they only go to the doctor or the hospital if they have to.
I used to live in France. In France, you just go to the 24-hour green plus sign pharmacist, and the people that work in there know more than a doctor at Stanford University. Like, you get really good healthcare from your
They know
pharmacist
different things.
in France.
I've got an African who's doing research, top global research at Stanford in ear infections, because water, if a kid goes in the water that's polluted, it's going to, and then it takes forever to get rid of it. So he's got some novel ways to solve that problem. So I'm not into bad mouthing, one university or another. There's always good people everywhere.
Well, I'm so impolite and you're so polite. I think that the advent of the smartphone being there, like a great computer in your hand at the home that can easily be tethered to some device that could then, scan you or whatever, connected to the internet where there's telemedicine, that these three things, the Cray computer that is your smartphone, connected to a tetherable device that should be relatively low cost, so it's in the home without going to $1,000 per square foot emergency room. And then telemedicine, whether it's to the latest doctor to diagnose that in Zurich, or the trained practitioner in Zimbabwe who can live like a king or a queen on a $50,000 a year salary while processing 40 diagnoses a week. Like, these things to me are shocking, that we're not delivering healthcare
Right.
in a better way.
Okay, so
But my God, you're just swimming against the river
but no,
with
not really.
government.
That Teledoc unicorn I mentioned earlier, I headed the angel due diligence team in 2004. And that it did take like forever, but it took 12 to 14 years for it to become a unicorn, and for me to get an exit. But now, it's everybody's real excited.
That was
about
personal
Teledoc.
money, right? That was personal money.
So, yeah, yeah, yeah.
So there you go.
TD. Yeah. So basically, the way our team has done it is we've made the riskier investments ourselves personally first. We built our own companies. We did our angel investing. We made our mistakes. We got our hard knocks. We learned our lessons, and now we carry forward. And we don't have any trouble deciding strategy because we figured it all out. Each on our own, we come together and it works. But back to COVID, some of the other lessons are just, to me, I was just amazed that American economy got so bent out of shape into a pretzel over one life-threatening disease, when Africans on a daily basis face at least 4 like this. So when my family and friends were saying, "Oh, how are all your poor Africans surviving this terrible thing?" I'm saying, they've been living with malaria, TB, and it's drug resistant, and typhoid and cholera all simultaneously forever. And now you know why their economies have been having trouble. Why don't we just solve some of these problems? Yeah.
We have a question from Ali Chow. Ali, do you mind turning your camera on if it's okay, or at a minimum, D-mic, and ask your question to Marsha, please?
Yeah.
Oh, hi, Ellie. Aren't you cute?
I just asked, what is the best way to make connections in a foreign market?
Friends. Look around you at school. Do you know anybody from another country?
I'm
Like
from Mexico.
Zimbabwe, maybe. Yeah, you've got to work from a base of personal knowledge and personal relationships. If you don't feel comfortable, if you don't know what you don't know, then you've got to have friends that you trust, who care about you and you care about them, to help you through, to be honest with you. Otherwise, you'll make really expensive mistakes. Good question, though.
Thank
I started with an NPR interview, or maybe it was BBC, of Dr. Mampela Rampele, who was part of the resistance as a colleague of Mandela in South Africa. And she somehow got her PhD in what is it, that anthropology. And by the time she was being interviewed, it was post-apartheid, and she was the most highly ranked educator in the country. She was over the University of Cape Town as vice chancellor. And so when our company did a joint venture in South Africa, I asked our joint venture partners if they knew her, and some had sat on boards with her. So they introduced me on my next trip. And then she introduced me to her. We bonded over, she challenged me to, where else can you create history, change the world, on a daily basis. And so she started introducing me. She knew what I wanted to do. She introduced me to her university's business school. They have a Center of Innovation and Entrepreneurship at the University of Cape Town. And so I got to know the founder there, who was a retired biochem PhD, who built a company, Ladies Hosiery, that got bought by Sara Lee, and it went public under that. Anyway, so every time I'd go to South Africa, every 6 months, 4 months, I'd stay for 2 or 3 weeks and get introduced around. Every time I went down, I got I not only enlarged my network, but also elevated the quality and the caliber of the people with whom I was dealing. So I got to know all the private, what do you call it, intellectual property attorneys, the VCs that were backing the accelerators, the tech hubs, the innovation hubs. You go to the engineering schools and get to know the tech transfer people. If you know, startup and innovation is your niche that really turns you on, you can, you know, that worked for me. But getting into the investors, oh my God, that was another, you know, decades of angel investing, and they still didn't want to go into, even the impact investors, they didn't want to go into Africa. They didn't want to have to get on a plane and fly down for board meetings or whatever. It was interesting. So you really, I think the more you know your passion, the more you learn, the more passionate you become about your niche. And then you find others that share that passion. And then you start building something together. So our team has actually been together since 2009. But the advantage of diversity, and Silicon Valley leaders are really aware of this. I spoke on a diversity panel with all women at a French-based innovation center called Schoolhouse Labs in Silicon Valley. And it was the most beautiful evening imaginable, real big crowd. But instead of letting the reporter get everybody all, you know, emotional and incensed and criticizing the guys and all that stuff, we just either spoke from personal experience or we spoke about research. And it was the most enlightening thing. And all of the panelists like me were saying, you know, if a woman has a passion and works hard, she gets people to follow her. And some of the research was wonderful. This one gal works on that end of things. And we learned that it doesn't matter whether it's all women or all men. If you don't have diversity on your board or your management team, you're going to make a lot more mistakes. You know why?
Oh,
Because you're
absolutely.
so comfortable. Whoever comes up with an idea and everybody thinks alike, they all think, well, that's a great idea, because they don't have a little kid, an old person, a Black person, a Chinese person, you know, African, to say, oh, but in our culture, that brand name will be awful. or you know, what about this problem that this demographic group faces? Or, you know, it's just, so what happens is that when you know that you're going to have to face diverse opinions and hard questions, you prepare better and you listen more, because you have to work through those, and that makes your prototype way better. It makes your market entry more successful, makes your price and your, you know, everything's more embraceable. Because I was one of the few in one of the first, okay, Morgan Stanley bought out Dean Witter. I was one of the first women trained in Dean Witter. And they wanted me to go into management. And I was perfectly happy in a room full of 60 men, as long as the speaker didn't point out that I was different. Don't do that to me. I'm just one of the gang. I'm not better, I'm not worse, I'm just there. And it you know, if you're singled out, then it makes you feel more isolated. So, you know, as if you're different. But, you know, anyway, so my 2 cents worth. So does that mean that we should invest in all women teams? No, you'll have the same dang problem, guys. You just change it out. If they're all women, they're not going to be. I invested in the first Texas all women venture capital fund, and it did miserable. Americans think that they're better than they are. I'm sorry. No, I was surprised too when okay, so like I said, we usually start with grassroots stuff, and Idris and his wife, who are Nigerian, they are living in Cairo and raising their family there. Why? Because she had friends there and she wanted to go live there. And it turns out Cairo is a wonderful place to invest. So anyway, Idris has been learning Arabic and whatnot, and so he held himself personally. He held a what do you call it? A competition for Arabic speaking diaspora in the United States. I think this way it went. And so it was a big award thing. And the judges, he wasn't on the judging panel. The judges whatever. Turns out that at least 40% of the finalists were female. You know, they're wrapped up and tied, tied with a bow, and there they are. We've just been talking about friends and networks, and those people who I'm sure you're referring to the old staid big names in Silicon Valley. Where are their networks? They don't have the networks to be investing in the new and upcoming female entrepreneurs. They just don't have them.
I have a quick question.
Hi.
Hi. I just wanted to ask, like, what gave you the background needed to be an investor? Like, did you study, like, did you take an MBA or did you study business at school?
Yes, dear. Thank you for asking. But I think that it depends on which asset class and which stage of growth you would like to invest in. And it would take a different background for each. I've got a little bit of everything, where I helped build my own little businesses. You know, I made clothes. I seamstress. That's how I paid for my first year of college. And then I made furniture, built a furniture business. Then we built a sign business. And I started realizing these sole proprietorships had limited growth opportunities, because they just couldn't scale well. So then I did get trained as an investment broker, so that I could learn how to manage portfolios and how to understand returns and, you know, bonds versus stocks and private equity investing and all that stuff. And then I helped build a company from mid-size to being a unicorn, going public and being multiple countries. I helped open offices in Africa. So you get to learn, you know, a little bit about everything if you live as long as I do, eventually. And then you start deciding what you prefer yourself to really focus on. So on the side, I was doing the angel investing with other friends and organizations that shared my values. And I'd have to fly to East Coast or West Coast when I was living in Texas, because nobody in Texas was doing it. But you know, just basically follow your passions. Just if you're curious about something. I had no idea why I was curious about what venture capital was, but I was so excited the first time I met somebody who was doing it. And he happened to be a board member, and he took me under his wing, and he introduced me to somebody from EY who could teach me. And so I just helped that EY guy do some calling to find out the stores that were buying the clothing that this company was making that he wanted to invest in. So I learned how to do due diligence that way. You know, you learn from somebody else who's doing it. It just, you know, you probably can think of people that you know who are doing something like what you want to do. Learn from them and then tell them, I'm interested in this related thing. Could you introduce me to somebody that you would trust to tutor me in that, so I could learn? I can help them. I'll do whatever they tell me to do, and I'll learn from that. And, you know, most of the time you'll just say, oh, that wasn't much fun, but I learned this. And later in life, you'll figure out how to plug it into what you do love.
So from just of having seen a lot of founders and successful ventures, what do you think is a good strategy for picking a co-founder?
Make sure that they think differently than you do, but that they care about the same thing you care about accomplishing. That's pretty much it. Okay, I'll tell you something. I spent, when I went to Y Combinator, and I was at a side event, and I met a African entrepreneur who was launching a health tech venture. And I decided very early on that I wanted to invest, but of course I had partners that hadn't met them and were more reserved about it. But I spent the weekend with them here. They came to Carmel. We hiked. We you know, petted the animals and did stuff together. And I listened to the way that their team interacted, the CEO, the COO, and the CTO. And they challenged each other. And they laughed together, and they dreamed together, and they argued with each other. But they never lost, they were never disrespectful to each other. But you could tell that they were honing the strategy and the processes and procedures for their company. And so I went for it, even though my absolutely star performing, we'd call them stock pickers in the public market, he wasn't so sure about this. So he made me negotiate a really low valuation of 3.5 million if we came in pre demo day, which we did. And that company now is the most valuable health tech company on the continent. They've just did a stealth A round, so nobody knew. Maybe a B round too. Nobody knew that they were doing this well. That's now called Reliance HMO. When they were at Y Combinator, it was Kangpei, and now Idris tips his hat for me, saying that if I dig my heels in, he'll back me now. But the point is that watching how that team work together would give you a good example of what you're going to want to look for in your co-founder. Does that make sense?
Yeah, totally. Thank you.
I think the important thing is to have shared values. We want to make a difference in healthcare by, making it timely, low cost, higher quality, easier to, they started when nobody had insurance, health insurance, hardly. And that's because you had to pay a year's worth in advance. And there's no appointments for a doctor. You have to just go and spend the whole day waiting. And they've changed both of those things already in Nigeria. We invest, when we are diversifying this next fund, it'll be probably about 60 companies in the 16, with the 16
60
million.
companies,
With the 16
or somewhat equal shots, or do you double down in your winners?
No, we double down on the winners. Yeah. Mm-hmm. Yeah.
What percentage of the fund is doubling down?
A third.
A third. Okay. That's a
Well,
standard.
actually, that would be like tripling down, because your first check, it may be for this fund. For the prior fund, the first check was 50. For this fund, the first check, the lowest checks we've written have been about 100. So doubling is still only 200. And we plan to get up to like 2 million in the winners, right? So the way that our model works out, we've built models a lot, and I agree, people don't think that we can do this much investing, but we can. It all has to do with what your priorities are and what your ego is. We don't think that we know more than the entrepreneurs, but if we don't trust the entrepreneurs to know more than us, we don't invest. So it's kind of this dance.
And with that, I'd like to give a big thanks to Marsha Wulff. Thanks so much, and see you next time.